Get to Barclays. Just last month, we learned that Barclays' wealth management division was on the auction block, and now we're learning who might be buying. Our very own Charlie Gasparino here now with the exclusive details.
Or better yet, who might not be buying. Let me just fix my tie. You should always check my tie, you know.
It's up to me now.
Yes, please. Is it good?
It's good. Yeah,
okay. Who might not be buying because they can't sell it. I mean, here's what we know, what's going on at Barclays. As the minute that we first reported last month that they were shopping their U.S. wealth management unit, the old Lehman Brothers brokerage firm, brokers were told, number one, to go back to work, because you're going to hear what's going to happen shortly, something's going to happen shortly, and two, those brokers started sending their resumes across Wall Street. Here's what we know. A major brokerage team today left for J.P. Morgan. They lost a major brokerage firm team, and as they're trying to sell this thing, and here's the pickle that they're in, major, oh God, I guess they're probably listening to this report right now.
Good.
Major brokerage teams are leaving, which is making it exceedingly difficult for them to sell this thing. From what I understand, it started off at something like 250 brokers. They're down to about 150 right now. Teams are leaving. It's very difficult to sell. The last we've heard was that CIBC was interested in buying it. We don't know where those talks are, but clearly Barclays is having a very difficult time selling this stuff and getting a decent price for it. Now, I think there will be sold. There will be a bunch of brokers left. The assets under management was something like $80 billion.
Just to be clear, is it the brokerage unit, the wealth management unit, or it's the same thing?
It's the same thing.
Okay.
It's the U.S.-based part. It's what was known as the Lehman Brothers brokerage unit, which dealt with very high net worth individuals while it was at Lehman Brothers. They managed a lot of money, something like $80 billion. That number has been cut down dramatically over the years, and even now, assets are moving out the door. So this says a couple things. I mean, it tells you that if you run a brokerage firm, your assets leave when the people leave, and that's what's going on right now. Major brokers are leaving; they're moving to other firms. Number two, if you have a broker, and a lot of people do have brokers at Barclays, chances are your broker is not going to be working at Barclays much longer. He's going to be working at another firm. So and you as the customer are going to get integrated into a completely different platform.
Is this fleeing? People are rushing out to try and get jobs at private equity, at hedge funds?
No, other Wall Street brokerage firms. J.P. Morgan, as I said, just picked up a major team.
Okay.
Other firms are picking up major teams. I can tell you that Morgan Stanley is looking to pinch brokers. And, you know, a lot of this is going to happen at Merrill Lynch, which is long considered the premier brokerage firm, because they have 7-year lockup contracts on a lot of the brokers, which is coming to an end. Those guys are going to be looking to jump elsewhere. Now, I would just...
like no compete?
Yeah, listen, there's yes, there are two sides of the story, two tiers. Number one's the Wall Street story. Fox Business is aired in a lot of brokerage firms. They want to know about the gossip that's going on. But you, as an individual investor, need to know about this, because if your broker leaves, you are put in a different position. You are with a different firm, a different set of circumstances. It's going to be a different sales pitch. Remember that. Just because you keep the same broker doesn't mean you're going to have the same set of circumstances when he leaves. And this sort of jumping around from firms does impact the individual investor, who is obviously our viewers here.
Charlie, thank you.
By the way, thank you. If you notice one thing, to talk about that Apple story, the stock didn't move on that.
At all.
Why?
Well, I don't think it also moved on Carl Icahn's demands either.
You know why? Neither of them, neither Carl's demands or Apple getting out of the TV business, is much of a story. Because remember, Apple is still in the TV business. They offer a TV offering.
Right.
They don't. Maybe they don't want to create a TV set. But remember, the future of watching movies and stuff like that.
The phones.
Remember that. That's why this is
smartphone.
That's why.
Killed
Right.
Apple TV.
You don't need it. They're still going to have a TV offering. It's a non-story. And what Carl is saying, Carl's full of it on this one. I'm telling you, I like Carl, but he is full of it on this one. What he's asking for is nonsense.
Gene Munster, just in a more delicate way, Charlie, said the exact same thing.
Right. This is a nonsense story. Carl is blowing smoke, and, you know, he should go back to Herbalife on this one.
Okay. Charlie, thank you.
Okay.